And hello traders, and welcome to another video. So in this video we are going to talk about trade management. Okay, so guys, we basically have our own system on how we manage our trades. So we do not use the normal methods of setting our take profits, or aiming always for 1.3 or 1.5 or anything like that. So we do not do these things. So basically we manage our position with the trend. So as you guys know, again, what are the problems and what are the disadvantages of retail trading is when they're winning, they're again fearful, and when they're losing, they're hopeful. So that means when they win small because they're scared of profits. They want to cut their losses, cut their winners, bank profits, take profits. And when they're losing, they're hopeful, and they usually lose more than they're supposed to. But again, we want to do things differently. So when we win, we want to win big. We want to take advantage of the whole move. We want to scaling in the position even more, to win even more. We want to win big, okay? And when we lose, we are reducing our risk. So you're gonna see that after we break the high, we're immediately managing our position, reducing our risk. So you're gonna have trades that you're gonna hit they're gonna hit your stop loss, but you're not gonna lose a full minus 1% because you're gonna reduce your risk. So basically completely different mindset, completely different thing than the average retail trader. So again, guys, hybrid strategy is all about robotizing our trading and reducing the emotions that we feel as traders, reducing that decision-making process and eliminating as much of the decisions as possible after our trading. So basically with the trade management system, what we want to do is that we do not want to make a decision where we want to get out of the trade, or where our take profit is going to be. We want to let the market decide that for us. Okay, so this is going to help you tremendously, guys, when you're trading on bigger capital, because believe me, trading on bigger capital is really, really hard. Okay, so emotions that you're feeling when you're trading on bigger capital are just out of this world. They're really hard to manage. And this is why our trade management system is going to allow us to not feel those emotions when we're trading on bigger capital. And thus we are gonna, be able to extract, a lot of percentages out of our trades. And basically we're just doing nothing. Markets is deciding for us where are we getting, out of the trade. So everything is robotized and everything is systematic with our trade management approach. And this is allowing us and allowing our strategy to be as much robotized and systematic as possible, because again, it's eliminating that decision-making process out of our trading, because as traders, when we make our decision, it's usually emotional, especially when trading the bigger capital. So this is going to help you tremendously on a bigger capital. As I said before, guys, there are tons of good strategies out there, but again, they just simply fail when they are traded on the bigger capital, because trading on bigger capital is really, really, really hard. So basically this system is gonna make a huge difference in your trading. Okay, so yeah, let's start the video. I'm gonna explain everything how we do things here. So as you guys can see, we have seen this descending price action. Price, started to break above. We had this a little bit more aggressive entry on this demand zone here. Price broke. Basically, we had this descending structure, break of this high here, change of character. Price reacted, came back a little bit aggressively, forming volatility on this demand zone here, but demand zone was respected. We put a new higher high. Again, coming back on the distance bar, we barely touched it, but again, still reaction. And we boom, again broke the high, a retrace, and again, right now we are breaking the highs. So we see that we have our retrace candle here, and this would be our trade right here. So, okay, we see that our stop loss is 25 pips. So 25 pips on Euro AUD is big. So max that we want to go when we're trading on Euro AUD, we want to go with 20 pips max. So if the stop loss is 21 pips, that means that automatically we are entering on 50% order block. So it's more refinement of the strategy. So we're not taking full order block in consideration. We are taking only half, 50%. This gives us basically, you know, smaller stop loss, and thus bigger risk reward. Okay, so let's see what happened. And price give us entry. Okay, so not gonna talk about, you know, entry that much. You know, it's not the theme of the video. The important thing is how do we manage our trade. Okay, so we got involved in a trade. Right now, as we got involved in a trade, we are not doing anything. We are not doing anything until we see this most recent high being taken. Okay, so right now, guys, we see that we have most recent high here and we have our most recent low here. This is where our stop loss is, and this is where, if price action breaks this high, we're gonna manage our position. Okay, so basically we're not doing anything. Yeah, okay, you just do not care what happens. Again, guys, you need to remember that you need to focus on things you can control and ignore the things you cannot control. What you cannot control is what price action does after your entry. What you can control is, do you want to get involved here or not? And how do you manage your trade? So if price action hits your stop loss or anything like that, just do not care. Okay, do not show emotions, because again, at the end of the day, what important is that you have respected your trade plan and you have focused on the things you can control. What price action is doing, those things you cannot control. Okay, so again, we have broken the high. As soon as we're breaking the high, we are seeing that we have a new high here, and we're looking where was our most recent low. So we are looking at where was our most recent low, and we can see that this was a retrace candle, this was a retrace candle, and our most recent low was here on this inside bar here. Right now, what we are doing, we are setting our stop loss 2 pips below this most recent low. Okay, so I'm not gonna do it exactly, but when you're trading, for the sake of this video, I'm not gonna do exactly, but when you're trading, it needs to be exact. So 2 pips below most recent low. This is how we're managing our trade. Okay, so you're gonna see that after we have broken this high, we are immediately reducing our risk. So right now, even if price action is reverse, it wants to reverse and take us out of the trade, we are not gonna lose 1%. We are gonna lose maybe 0.2%. And again, this is the part where when we lose, we want to lose small and cut our losses short. We don't want to hope that price action is magically going to reverse or anything like that. No, our stop loss is fixed, always 1%. Immediately after we broke the high, we're looking where was our most recent low, and we are managing our stop loss 2 pips below that most recent low. Okay, so let's see what happens next. We have a week, so probably we're gonna see a retrace, and we didn't. Okay, price action just has momentum and is pushing up. Here's the retrace after this week. So right now, again, your low still stays the same. It's still here, and your high is still the same. Nothing has changed. But right now you have a retrace candle. So this high is not breaking this previous high, so this is a retrace candle. So what are we waiting for right now is to break high again, so we can again manage our position. So right now you're doing anything. You do not do anything. You just let market decides where it wants to go. Market right now is basically, when you're looking highs and lows, is telling us that market is pushing higher. The uptrend is present. And you want to take advantage as much as possible out of that move, because price action is basically telling you it wants to trend to the upside. Let's see what happened. Probably we're gonna have a little bit retrace and boom, price broke. Okay, so right now you have a new higher high. So you have new most recent high. Your new most recent high is here, and looking at it like this, you're looking for most recent low. Managing, you're gonna see your most recent low is here. So you're setting your stop loss 2 pips below this most recent low, okay? So this is your locked profits right now. So around 3.3%. And again, guys, you're not doing anything. You're just following the rules. So what market wants to do, what price action wants to do next, it's up to price action. You do not make any decisions. You are just following a simple system, and that's it. I cannot explain to you how powerful this is and how it's gonna be how beneficial for you and your trading, because you are going to be able to trade on bigger capital with no emotions. Basically, just forget about the trade and just let the market do what it wants to do. Again, do not focus on the things you cannot control, okay? So market is deciding where you're gonna be out of the position, and you're just chilling back, relaxing with your hands up above your head and just, chilling. So we're not gonna talk about scaling or anything like this in this video. This is just a video where I talk about trade management. So we're gonna ignore the scaling positions. We're gonna ignore everything else. We're just focusing on the scaling position. Okay, so guys, right now we have our most recent high here, our most recent low here. Our stop loss is 2 pips below this low. Let's see what happens. Right now, price action is just breaking high. So we just basically have a new higher high created. We do not have anything. We do not have any retraces. We're just doing nothing. We're just chilling. We cannot manage our position. So what are we waiting for right now is a retrace candle. When price action makes this big wick, we can usually expect a retrace candle. Let's see if that happened. And this was, I don't know, I'm not sure if this was a retrace candle. So if the candle is bearish, that doesn't mean it's a retrace candle, okay? The candle can be bearish and still break the previous high, so it's still gonna be an uptrend, and you're still not gonna, calculate this as a retrace candle. But when you're not sure, when they're almost equal, I think it's a retrace, but to be sure, again, guys, you have these numbers above in TradingView. So this is showing you how the high of the candle, and this is showing you the low of the candle. So we're gonna look at this high, and we're gonna see that high here is 1.59691, and here is 9.0. Okay, so 59690. So this is a retrace candle. It was a little bit smaller, or it wasn't. Wait. Yeah, it was. So you're gonna see it like this. It was a retrace candle. So for 0.1. So when the both wicks are equal, we do not calculate it as a retrace candle. Remember this. So if they're equal, they're part of the same momentum. Okay, if they're equal or higher, then it's the part of the same momentum. You do not have a retrace candle, but when it's obvious, a retrace candle for, just small like this, 0.1, but it's still a retrace candle. So right now, what are we waiting for is, so we can break the high again, so we can manage our position. Let's see what happens. And we just took the high again. So right now, after we make this break of structure, our most recent high is right here, and we're looking for where is our most recent low. So we go lower, and we see that our most recent low was here. So again, 2 pips below that most recent low. This is where we manage our position, and we just go like this. So again, this high is taking out the previous high, so there is no retrace candle. It's a part of the same momentum to the upside. The next candle, again, breaking the high, nothing really happening. There is no retrace candle. We have left the big wick, so we can expect to see a retrace candle. Let's see, and there is a retrace candle. This high is not is lower than this previous high, so this was a retrace candle. So right now, again, we are waiting. If we want to manage our position, basically we're not doing anything here. We're not making decisions where we want to get involved or anything like that. We just are letting price action do its thing, okay? And that's it. You're forgetting about the price action. So we're waiting the price to break the high again, and boom, we barely broke it. Okay, so sometimes you're gonna see a position like this. Where you're gonna break the high, and when you're looking for the most recent low to manage your position, it's gonna be the same candle. So as you guys can see, Okay, it's the same candle. So it happens sometimes, it doesn't happen all the time, but you know, this was also the one candle made a high and a low. So basically we're gonna have a high of this candle and a low on this candle. So again, 2 pips below, and we are just looking to see what price action wants to do next. Again, this is not a retrace candle, guys. Why? Because this high is higher than the previous candle. So even though this is a bearish candle, it's still, you know, part of the move to the upside. So again, the candle is breaking, the high is breaking. So again, this is just one momentum to the upside. We're not doing anything. Again, we're not doing anything. Price action just breaking the highs. We see the big wick, so we can expect to see a retrace candle, but price action just pushing higher, and again pushing higher, and again at this point you're not doing anything, you're just waiting for a retrace candle. So it's usually we're gonna see it right here, and this is a retrace candle. So right now, again guys, in order for you to manage the position, you need to see that this high is broken. Okay, so let's see what is gonna happen. Have a longer pullback, and usually here people would get scared. So why? Right now your trade was going for almost 20%. Almost 20%. That's a lot of money. If you're trading only 100k account, this is like $20,000. And all of a sudden you see your money getting taken away from you. It reduces, boo, 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 boo. Up this point, you lost around 7 to 8k. And when you're thinking about money, when you're trading, this is where emotions, you know, are kicking in. And this is where traders do not remember that market needs to pull back. So you cannot, market cannot just move in uptrend. This is a healthy correction. So you have an impulse and you have a correction. And what happens after impulse and correction usually? Highs get taken and you continue to trend to the upside. So this is where a lot of traders get scared, and they close the position. But guys, if you are continuing to, if you do that, you're just ruining everything. You cannot believe your analysis, you cannot believe your backtesting data, you're not following your trade plan. You're just losing, because sometimes you're gonna get scared here. You're gonna get scared here. Price action going in 10k, it's gonna be a pullback, and you're gonna lose 5-6k, and you're gonna close it because you want to be safe. Because it's natural. You feel fear of money. Believe me, you're gonna feel it. Maybe it's interesting right now for you, and you're like, how can I be scared of profits? But believe me, when you're making $10k in a single trade and price starts to pull back, and all of a sudden you lose 50% of that money, whoa, you are going to feel fear. And this is why you should not do anything, because market is making decision for us. If you somehow manage to exit the trade because you got scared, what's gonna happen if market starts to trend and you basically lost a lot of money? You left a lot of money on the table. So you're gonna close it on 5% because you got scared, and price action is gonna move another 15%. Again, guys, when you win, you want to be, when you write, you want to win big, okay? And you let your profits run. And when you lose, you want to lose small and cut your losses short. Completely opposite of a retail trader, okay? So right now, this is just a healthy pullback. Nothing to get scared. You do not care. Price action is doing what price action wants to do. You are just managing your trade based on price action. We still have a low here. Lock profits 7.4. We have our high here, and we're just basically waiting to see what happens. Price action breaking above, not breaking the high. A lot of traders would get scared here. A lot of them would get scared. A lot of them would be emotional, like, please break the high, please break the high. You know, never manage the position yourself, because 90% of the time that decision is going to be made emotionally. And this is why this is better, because everything is robotized. You do not make any decision. Market makes that decision for us, okay? You're just waiting, and you're gonna see that we just broke the high. So when we broke the high, then we are managing our position. So our high right now is here. we're looking at where was our most recent low. So we can see that we had a retrace here. So our most recent low is right here. So it's going to be, again, locked profits. It's going to be locked profits of around 17%. Okay. And again, guys, 2 pips below, sorry, 2 pips below. And again, you're doing nothing. You're just managing the position with price action. What price action? If price action decides to take you out of the trade, it's perfectly fine. Usually, if price action, because right now price is still indicating to you that price action is an uptrend. Maybe right now we see this another massive leg to the upside. Why would you close it? Why would you close it? Let your winners run. Just let them run. Price is in an uptrend. It's showing you that it's breaking highs. Okay, and the trend is bullish. You want to take advantage of that, not scare close it. So just leave the price action. Okay, if price action shows you it's breaking the low, it's most likely we're going to reverse. And of course, your safest place, your safest stop loss is here. Basically, the safest place where your stop loss can be is here. Okay, so you're going to see the price take you out of the trade. And, you know, again, you do not make decision where price action is going to take you out of the trade. Market does that for you. So really, really beautiful when you understand everything. And if you, again, guys, if something is not clear to you, just ask a question in the community or send me a message privately in a DM. I'm gonna be more than happy to reply and help. So, but again, after you have watched the video, go and test it out. Okay, when you do a little back test a little bit, you're gonna manage everything. If you don't understand it, there are gonna be times. So do not worry, guys. So I have another example here. I wanted to do 2 examples just to make to be sure, you know, that you guys understand everything. So I have another trade here. So you're gonna see that we had this impulse to the upside, weakness, a little bit of imbalance left behind. So we can trade this as our high probability news pattern. So a weakness to the upside, price retracing. Coming back, testing this demand, retracing, breaking this demand, and right now we have basically a flip. This is a supply, continuation, impulse, correction, impulse. So this is where we want to get involved in a trade. We're not going to talk about the entries that much, so we're just focusing basically on the trade management. So let's see what happened. Price tagged you in the entry. So basically we're not doing anything. Price has tagged you in, and you just, you are chilling. You just want to see that this low is being taken. When this low is being taken, then you are managing your trade. Okay. Oops. Sorry, guys. Wrong button. Okay. So we broke the low. So our most recent low is gonna be here. And looking at this, where is our most recent high? It's here. So 2 pips above. Unfortunately, in this position, we would not. Basically, we wouldn't reduce our risks, so we would still have full 1% risk on the table. Sometimes, price action is going to do that. So still, price action broke the low, but we didn't manage the position because our high is here, and 2 pips above this high, is still full 1% loss if price decides to take you out. So let's see what happened next. Price starts to pull back right now. And guys, believe me, you're gonna get tested here, and this is gonna happen. So at this point, you had your entry here, and price was going for almost 5%. So price was going almost 5% in your favor. So you were earning like 5%. And then all of a sudden, price action starts to pull back. Here is your break-even trade. What's the thing that people are thinking here? What do they want to do? Set their trade on break even. Yeah? So they don't lose 1%. But let me ask you a question. Why is your decision right now changed? What happened and your decision right now is changed? You wanted to take the trade and you already had made your decision to enter the trade. But right now, after price did something, going 5%, just imagine you were in a verification and, your basically your profit target to passive verification would be here, and price did this. Wow, it would be emotional for you. You would get angry, you would curse, you would tell yourself, this always happens to me. Why price action is doing this? Market hates me, you know. Normal things that we feel as traders, you know, are perfectly normal. And market does this. So your first instinct would be to secure profits and set your trade on break even. But it doesn't work like that. You have rules in place and you cannot change the rules. Okay, so you need to follow them in order to trade this strategy successfully. If you try to do this one time and I'm gonna only do this one time, you're gonna do it forever. Break the rule one time and you're gonna break it second time as well. Break it for, do you understand? You should always follow the rules. You didn't had a trade management, your stop loss is still full minus 5%. And if price action tags you out of the trade, it tags you out of the trade. You have already made your decision here, guys. So you already had made your decision and you were ready to take a minus 1% trade, but right now, because price action did this, your decision has changed. What happened? What? I don't understand. So market movement happened. The thing you cannot control happened, and you're thinking about it, and you're managing your trade right now on break even though you know you're supposed to not to do that, because you do not have your trade management is here. But believe me, you're gonna get tested. You're gonna get tested. And this is why it's important to backtest. So you're gonna see, even though sometimes it's gonna happen, guys, this is a part of the game, part of the process. You're gonna have the trade going for like 4 or 5% and coming back and hitting your stop loss. You're gonna have it. You're gonna have a trade. You're gonna have your pending order here. Price action is gonna do this. It's gonna ignore your pending order. It's gonna go in profit. This is gonna happen. You're gonna have losing streaks. Price tagging you. You're gonna have your stop loss here. Price entering your trade, price barely tags you out of the trade, takes your stop loss, and then continues. Those things are going to happen. Those things are part of the game, and you need to learn to deal with them. And this is why I told you that backtesting is really important, because on backtesting, you're gonna see that those things are normal, and those things do not affect your overall percentage win rate at the end of the year. You're gonna be perfectly fine with them. So you're not gonna get stressed over them when they happen on live. So guys, again, your decision was made here. What happens after? You are in no control. You do not control those things. You control only your entry, execution, and trade management. Those are the things that you can control. And your emotions in the process. If you let your emotions guide you, yes, then you're gonna make mistakes. But again, what happens after, what price action does, you cannot control those things. Do not focus on them. Do not think about them. You're just gonna make your mistakes, and you're just gonna move in circle and never do anything really with trading, because you're thinking like that. Again, guys, price action is showing us this is our most recent low, this is our most recent highs, 2 pips above. We're not doing anything. We're just not doing anything. We do not care. If this was minus 1%, this was minus 1%. We already have made our decision when we entered this trade that we can lose it. Okay, so let's see what happened. Boom, price action reversed, and right now we're breaking the low. And what would happen if you took a trade on break even? If price just tags you out, it can happen. It can happen. I can show you trades. So it's gonna happen that, you know, price comes back again on your break even, and then comes. In this case, we didn't. Price didn't tag you out on break even here, but you know, in a lot of cases, it's gonna happen. It's gonna do this, come back in your break even trade area, and then again push lower. What we have done if you didn't respect your trade plan, and price tag you out of break even and continue in your favor, and boom, you're passing red, you know, your verification. You would be angry at yourself. You would be angry at yourself that you didn't respect your own rules. And you should be if you don't respect them. Okay? So just follow the rules, guys. And that's it. Pretty simple as that. So again, we're breaking this low, so we are managing our position. Most recent low is here. You're looking at most recent high. Most recent high is here. 2 pips above. This is where we manage our position, and we're waiting for a retrace candle. So this candle is taking out the previous low, so we do not do anything. This candle is taking the previous low. We do not do anything. Again, this candle is taking the previous low, so there is no retrace. We do not do anything. Again, this candle is taking the previous low. We do not do anything. This candle is also taking the previous low. We do not do anything. This candle is taking the previous low. So again, we're not doing anything. Again, we're not doing anything. And this was a retrace candle. So you see that this low was not lower than this. So this was a retrace candle. So right now we are seeing, we want to see that price action breaks this low, and then we can manage our position. So with next candle, price action broke this low. So our new most recent low is here. Our new most recent high is right here on this inside bar candle. So we're managing our 2 pips above this, and we're just following the rules. Market does what market needs to be doing. We cannot control that. We are just only focusing on things we can control, and that is following the rules. We're not going to speak about trade management, scaling or entries or anything, just trade management. So again, every low, as you guys can see, is taken with the previous low. So this is only a downtrend, no retraces. And this was a retrace candle. And price barely tagged us out, but it didn't. And with this candle, okay, so this is going to happen sometimes. So this is a good example, because sometimes you need to react fast. So as you guys can see, again, the same thing, the same candle took the low, and as the candle took the low, we would have basically our break of structure, and we would manage our position. So our most recent low would be here, and our most recent high would be here. But if, as you can see, boom, if you didn't manage your position right here, you would lose money. So here the price would 2 pips above this most recent high would be 17.83 risk reward trade, and your second most recent high was here on 15%, 16%, so almost 1.5% difference because of one candle, because everything happened too fast. So if this happened, if you didn't react right, your stop loss would be still here, and you would basically lose money. So this is why you need to focus, because look at this, the same candle, took this low, and after we have took this low, this would be our most recent low, and following that, this would be our most recent high. So our new stop loss would be here, 2 pips above, and basically the same candle, boom, took us out. So this is why sometimes you need to react fast, so sometimes this can happen. You get breakout, you manage position fast, and boom, then second candle tags you out. So this is why you need to react. So that's basically it, guys. I hope I explained everything correctly. So I hope that you have understand everything correctly. Again, if you do not understand a certain things, just ask, guys. We are here for that, basically. So yeah, just following the rules. It's really simple. As you go on, as you manage, you're gonna see it's pretty simple, nothing hard. Again, I think that everybody sees the advantages that this trade management strategy and system really gives us, and yeah, that's pretty much it, guys. So hope you enjoyed it, hope you liked it, and yeah, I'm gonna see you in the next one.